What if 20% of the world's oil supply vanished overnight? Not in some hypothetical scenario, but right now. Iran's Revolutionary Guard is broadcasting a chilling message across the Strait of Hormuz: no ship is allowed to pass. Over the weekend, the United States and Israel launched coordinated strikes on Iran, killing Supreme Leader Ayatollah Ali Khamenei, the most significant targeted action since the Soleimani strike, but on an entirely different scale. Tehran's response was immediate and sweeping: retaliatory attacks on American military installations across 9 countries, from the UAE to Jordan to Iraq. But the economic weapon is what has markets on edge. The Strait of Hormuz, a passage barely 33 kilometers wide, carries 20 million barrels of oil every single day. That's $500 billion in annual energy trade, and Iran is now threatening to shut it down. Crude oil surged 8% overnight. WTI jumped from $67 to over $72. And the S&P 500 dropped 1% at Monday's open. Here's what most coverage is missing. An 8% oil spike sounds manageable. $72 is still well below the $100 panic threshold. But that 8% came from a threat alone. No tanker has been seized, no mine has been laid, no ship has been struck. The market moved that much on words broadcast over VHF radio. That tells you something critical about the structural fragility underneath. After years of underinvestment in oil production capacity, OPEC's spare capacity cushion is razor thin. There is no strategic reserve large enough to replace 20 million barrels a day. And this crisis doesn't exist in isolation. It's arriving alongside new 10% tariffs on China taking effect March 4, and inflation data from last week that already came in hotter than expected. Central banks now face a nightmare scenario: energy-driven inflation surging at the exact moment the economy needs rate cuts to avoid recession. There is no good policy answer to that. If the strait closes even partially, you will feel it within days, not weeks. Gasoline prices would spike. Shipping costs would cascade through every product you buy, from groceries to electronics. Europe and Asia, which depend far more on Middle Eastern oil than the US, would face an immediate energy emergency. And here's the compounding problem: those new China tariffs on March 4 are already set to raise consumer prices. Stack an oil shock on top of that, and you're looking at the most inflationary moment since the 1970s energy crisis, except this time, government debt levels leave far less room to respond. The number to watch this week isn't the stock market, it's Brent crude. If it crosses $80 without a single ship being stopped, that tells you the market believes this escalation has no off-ramp. And that changes everything. Stay sharp, this story is moving fast. If this analysis helped you see the bigger picture, subscribe so you don't miss what comes next.